While most of the world is focused on stocks and bonds, a silent fracture is appearing in a market that underpins our entire technological world. We're talking about the global silver market. And according to the information we've analyzed, a new law out of China is about to turn that fracture into a full-blown earthquake. The deadline is January 1st, 2026, but the markets, well, they're not waiting. The panic is starting now. Here is the first undeniable signal that something is wrong. Right now, the very same ounce of silver costs $8 to $12 more in Shanghai than it does in New York. Now, in a healthy, functioning global market, a gap like this is a fantasy. It's a massive red flag screaming at the top of its lungs that the system is broken. You know, there's a reason this kind of gap shouldn't exist. It's called arbitrage. Think of it as the market's immune system. It's the force that keeps prices honest across the globe. Traders see a price difference, they buy low in one spot, sell high in another, and in doing so, they close the gap and pocket a risk-free profit. It's the glue that holds the entire commodity world together. But here's the core of the issue. For silver, that machine has completely shattered. We're looking at a massive risk-free profit of 15% or more just sitting there, and traders are refusing to take it. They're not bridging the gap between New York and Shanghai. And there's a very specific and very chilling reason why. So what could possibly be powerful enough to break this fundamental market mechanism? Well, according to our sources, it all traces back to one single piece of legislation, a new export control law coming out of China, which just so happens to be the world's largest refiner and supplier of silver. And this timeline just lays out how quickly this is all unfolding. The breakdown, that price premium, it's already here. But the drop-dead date is January 1st, 2026. That is the day silver officially gets reclassified as a dual-use, restricted strategic material by Beijing, and that one move changes everything for anyone trying to get physical silver out of the country. And these new rules, well, they aren't just strict. They're designed to be a guillotine for the market. The production and credit requirements are so impossibly high that they have one immediate and very clear result. An estimated 90% of the small and medium-sized refiners, the very ones who typically supply the West, are simply disqualified overnight. They're out of the... And this isn't just a forecast. This quote shows you the chaos that's already happening on the ground. This is the reported response that buyers are getting from their Chinese suppliers right now. The uncertainty is so complete that business is just stopped. Nobody can guarantee they'll be able to ship the metal, so nobody is willing to sell it. The supply chain is frozen solid. So, beyond that price gap and the frozen supply lines, what does the hard data tell us? Well, the source material points to something deeply alarming. A massive drain of physical silver inventories here in the West, which suggests the supply shock isn't coming, it's already here. Just look at this chart from COMEX, which is the main Western futures exchange. The registered category is basically the silver that's available for immediate sale and delivery. And what we've seen is a jaw-dropping 70% collapse over the last 5 years. The shelves are emptying out, and the pace is accelerating. Now, to put that drain into perspective, look at this number. In just the first week of December, buyers stepped up and demanded physical delivery of 47 million ounces. That's nearly 60%
of the entire remaining registered stockpile claimed in just 4 days. The source we're analyzing calls this a full-blown vault train emergency.
So the question is, who's doing all this buying? Well, according to a major U.S. dealer cited in the source, this is not a repeat of the retail panic we saw back in 2020. This time, it's the big players. It's institutions, it's industrial buyers, the solar panel manufacturers, the electronics giants, and they are all scrambling to get their hands on physical supply before it's gone. So this is the perfect storm, right? A supply shock, a broken market mechanism, and institutional panic. Where does this all lead after that January 1st deadline? The source material lays out 3 distinct and frankly dramatic scenarios for what could happen next. In the first scenario, the market simply reprices reality violently. The moment the broader market fully understands that the majority of the world's refining capacity is now stuck behind a new iron curtain, a frantic scramble could begin. The outcome? Prices don't just rise, they gap up overnight as everyone rushes to buy from a much, much smaller pool of available metal.
Now, the second scenario is even more serious. It's a structural failure of the market itself. If COMEX literally runs out of physical silver to deliver to all the people demanding it, it could be forced to default. It would just pay contract holders in cash. And at that moment, the paper price on your screen becomes meaningless. The link is severed, and you effectively have 2 silver markets, a paper one and a physical one, with 2 wildly different prices.
And in the third scenario, this whole situation escalates beyond the financial markets and becomes a matter of national security. Silver is absolutely critical for defense, from missile guidance systems to advanced electronics. The U.S. government could easily declare it a strategic asset, invoke the Defense Production Act, and effectively take control of all domestic supply to prioritize military needs.
So you might be thinking this is all just high-level market drama for traders and big companies. But what we're looking at here has ripple effects that would touch everyone. The source argues that a silver supply shock would be felt in every household.
You see, every single piece of modern electronics has silver in it. The phone in your pocket, the laptop on your desk, the car in your garage. A major price spike in silver means higher costs for all of them. It's a direct pipeline for real-world inflation. And bigger picture, it puts the entire green energy transition at risk and signals a dangerous new era. An era where essential materials are no longer just commodities, but geopolitical weapons. And that brings us to the one final critical question. For centuries, the invisible hand of arbitrage has stitched all the world's markets into a single global fabric. If the source material is correct, we are about to see what happens when that fabric is deliberately torn apart and a unified global market fractures for the first time right before our eyes.